Monday morning, folks, and welcome to a brand new episode of FINMET Mondays podcast. We're recording as of 1st of December, and we're entering into the final month of 2024. This year has been a bonanza year for gold, but we're entering into slightly weathered storms compared to how the markets have been for the majority part of this year. Off late, we've seen some undercurrents in terms of Trump trade. We've seen some geopolitics driving gold and safe haven demand. What's your assessment of all these market developments? What do you think is actually driving some of the inflows? And is there a tussle between bulls and bears currently?
We're seeing a little bit of a rotation in the market right now, what people have been calling the Trump trade. And what really happened was before the election, when it was looking like Trump may lose, a lot of his followers went into gold because they feared that the world was going to come to an end and they wanted a safe haven. And so there was this buying of gold as a safe haven or a store of value. What has happened with the Trump victory is that now we're seeing some of those people selling gold to take profit, but also what we're seeing is they're moving to another safe haven, according to them, which is Bitcoin. And that's why you see all the cryptocurrencies have gone up because Trump has been talking up those currencies and saying he's a very pro crypto person. So you see this rotation out from gold into crypto, which is why sometimes you see the gold prices go down. But on the other hand, what you're seeing is a lot of people who are fearful about what Trump's policies will bring, and it'll bring inflation, it'll bring chaos, have now been piling into gold because they feel that the world is going to be much more difficult. That's why I think you're seeing this swing between down and up and down and up. And clearly the critical technical levels that you mentioned have been holding, and that's maybe when the buyers are coming in. But I think it does explain why we're seeing this massive swings every day nowadays in the gold prices.
Understood.
Where do you see the technical levels now?
So, Sunil, before we go into the technical levels, I wanted to just kind of paint the picture of what's been happening. First, from a weekly perspective, and then from a daily perspective. It'll just help us inform our understanding better. So, on the weekly chart for US spot gold, we see that the 20 period moving average and the 50 period moving average, which is the red and the green line respectively, are on the verge of converging right over here. The red line has always been above the green line as far as we can go. There has been a few weeks where there has been a drop, but largely they have remained above the other. And we're going to keep watching how these two lines converge, or if they converge this week. And this is going to be something key for us to be able to decide how the markets are going to play out. So this definitely means, especially this downward sloping part in the last 3 to 4 weeks, that we've seen massive corrections as we know, and we're at the risk of really seeing a longer term downtrend form, especially on the weekly charts. What we see on the daily
You can see the
charts.
swings. You can see
Exactly.
the swings that we talk about down and up and down and up.
Down and up.
Yeah.
Exactly. This is what I was going to say, which is a couple of points that you mentioned, and I can see them playing in the charts as well. If you look at just this last week's price action, you see these 1, 2, 3, 4 candlesticks that have been forming here, just these 4 over here, right over here. And you see that each of these candlesticks have very thin bodies and very large wicks. But that basically is telling us that there's a lot of resistance and a lot of selling pressure that gold is facing, especially around these levels, around 2660, 2670. As soon as the metal climbs these levels, you're seeing a imminent pullback right after that. And so the metal is not able to break above this 2663 pivot that we have here. And you see this wedge sort of forming, especially just from the last week's movement, where the channel is converging, but it's kind of narrowing to a point where you do not see it breaking above a certain high. You're going to see the metal try and approach first cross 2660 if geopolitics continues, and maybe even head up to 2690. But this long-term bearish pattern that you see is what will kind of dictate whether this 2690 level is going to be broken or not. You've seen a big swing higher, then you've seen a swing low, then you see a lower swing high, and now we're yet to see the formation of a lower swing low. And my guess is that we may not even reach breaking 2690. We might kind of reach 2690 and we might see a pullback here, and that's where the potential movement can be. There's also another bit to observe is that on the daily charts, this red and the green lines that I was telling you on the weekly charts, we've already seen them broken. You see that the red line is below the green line, and that's a bear cross that is formed. So there's a lot of resistance visuals that I can see on the daily charts forming. So the general message for this week is, although geopolitics is the driving factor, the technicals don't look very good for gold. And so there's a higher risk for gold towards the downside. So if we do move towards the downside, where would gold form? It would go towards 2600. This is the level that we tested last week. And beyond 2600, we would see a retest of the 2547, the level that we saw a few weeks back, right? And from a more long-term perspective, if we see even 2547 forming, then we have even a bigger level over here, and that can be derived very easily when we go back right here and we take a Fibonacci retracement from this low to this high. You see the 61.8 retracement, which is somewhere around 2484. It beautifully converges exactly where I have formed the D part of this up and down pattern over here. This is too soon to be able to call this, but this is how the metal is shaping up slowly as we progress. Thanks, Neil. Let's watch the markets and let's see how they play out. But till then, thank you so much and goodbye.